It's 9 a.m. in Shanghai, Shenzhen, and here in Hong Kong, you're watching The China Show. I'm Annabelle Drewlers with David Ingles.
Good morning. We're counting down to the open of markets in Greater China. Let's get to your top stories this Monday morning. Stocks across the Asia Pacific are gaining after a volatile week on, well, optimism about potential Fed rate cuts in December and reports that the U.S. will allow Nvidia to sell AI chips to China.
Japan hits back at China as tensions spiral over Prime Minister Takaichi's comments about Taiwan. Tokyo says it will deploy missiles to a military base near the island.
Plus, we're digging into Lenovo's latest results with its CFO joining us in a couple of minutes here after the firm's revenue beating streets estimates here in a sign that strong AI demand is behind it. Good Monday morning to all of you. Thank you for joining us. Lots to get through as we are, well, going, obvious reasons, going into a fresh trading week. We're coming off the worst week for risk assets, and the proxy I use there is MSCI All Country, including Bitcoin also, obviously going into that. Worst week since about August, right? So Bitcoin had a bit of a crazy weekend. We were down to about 81,000. And then going into today, as you can see, we're up now to about 86. And I think that just underscores really the what a terrible week we've come from as far as risk assets go. There's a conversation to be had around the comments coming out of Chris Waller and the Fed, and now December being priced as a base case. We look at swaps, for example, about 62 two-thirds, let's call it that, going into the pricing. Flip the page, please, going into the December meeting, of course. Now, all that is to say that we are getting slightly off the edge as far as the AI bubble conversation is concerned. And, you know, also helping, obviously, is perhaps the Fed put, which is, as you can see, playing out across risk assets. Taiwan is coming online. We're better by about 1%. Perhaps it does help that we were down over 3% on Friday. Just keep in mind, Japan is shut, so no cash treasuries today. You are getting, of course, a proxy as far as futures go. Call it flat right now on Nikkei futures. Going into the open today, so we'll talk about Lenovo, a couple of moving averages to watch. You know, we took out several, in fact, to the downside. There's also have been some changes to the index, right? December 8th is the effective date. Some big names in, big names coming out. And just to mention, too, so we have a bond auction today. I think we have about 97 billion renminbi on 3-year bonds being auctioned on Monday. Dollar China 710. And a level to watch coming up on your screens on the Hang Seng Tech. We were on bear market watch on Friday. We did not get to that level. Obviously, the 3% drop puts us very close to this level. We're about 1% there away from 53.46. But looking at the early pricing, it looks like we'll go the opposite way of things. And we'll see, of course. It looks like we are poised for some gains going into the Monday open.
No, that's right. I think there's sort of two themes that our investors are looking at this morning, which are more positive. Firstly, you've got this chance of a Fed hike, or cut rather, in December. You're back on the table again, so that's being sort of indicated. But then also the other thing that came on Friday was our Bloomberg scoop, which is that essentially, as you mentioned, you know, the US administration could allow Nvidia to sell H200 chips to China. That's significant because usually we talk about the H20, but the H200 is a more advanced version. So these are both positive factors. But as you said, there's a couple of different levels. There's bear market for the SUSTech. You've got that 50-day moving average target in focus for a couple of others. The 200 moving day average for the China gauge. Macau casinos, we actually could see some strength here because we've seen better visitor arrivals in the latest numbers. Earnings to watch. I mean, I think that Alibaba, Meituan, the big focus for this week, but Want China is the one to watch today. And Want is actually one of the largest rice cracker and flavored drink manufacturers in the whole world. And then, as you mentioned, those index changes, reactions as well.
Yeah, processed foods. There we go. Okay. I don't mean that with any negative connotation.
It kind of came across like you did.
No, I read an article about it over the weekend, which we can get to later, of course.
65% of people's diets. No, the average person's diet in the US is like 65% ultra-processed.
Processed foods. Yeah, which you should pull back a little bit from that statistic. That is not to say, of course, underscores any negativity, just to be clear, of course, ahead of want earnings. But yeah, okay, so two things there, right? So we'll get to the Fed later on with Paul Dobson, of course, will be joining us, right? The put that's coming in across these markets, hence we're better 0.4%. But tell me, the Nvidia story in our scoop, what do we know exactly? Because this story keeps to be changing on a week-to-week basis.
Yeah, well, I just mentioned it, and I think it's important to make that distinction. Usually we talk about the H20 because that's the chip that has been designed specifically and modified. Yeah, so these are both from the Hopper series. Again, to make that distinction, right now it's the Blackwell architecture that's selling in the US, and we're scaling up or ramping up to Rubin architecture. So Hopper, you're a couple of iterations behind. But H200 is the chip that was designed for the global market. It's got more compute power, more bandwidth, higher memory capacity. So it's all overall just a better functioning chip, essentially. Maybe the Trump administration could look to allow Nvidia to sell those chips into mainland China. It would be a big win, of course, for Nvidia. Big win for China as well.
Yeah, and I think the Nvidia story, to your point, right, the results last week, really, they underscore the fact that the assumption for China is a zero business currently.
Yeah.
Anything on top of that becomes a bonus. How do you think this dovetails into the whole bubble conversation? Is this something that furthers that, or is it something completely almost...
I think it's sort of adjacent, because I think the way we think about the AI bubble conversation is this huge infrastructure build out in the US and then the impact that it's having on memory chip prices, for instance, and we're going to talk to Lenovo about that, for instance.
Absolutely.
I think the China story is still going to be that big question. Even if you relax these restrictions and allow them to sell the H200, do you end up in the same situation as the H20, where sales could restart, but the situation is that Beijing's telling its mainland companies, don't buy them. Do they do the same thing again?
Yeah, okay. Even though if they can sell it, doesn't mean they will, and there'll be willing buyers, of course. Okay, yeah, we'll get to the Nvidia story in a moment, but yeah, the point what Bell was making as well there is because Lenovo's coming online, and the whole conversation around supply constraints, and we don't seem to have enough chips around the AI play, and memory chip prices leading to cost, margin pressure, and how they might be able to weather that better than others. We'll get to that, of course, with the CFO in a moment there. Speaking of earnings, one China's coming out today. We're almost done with the earnings season. It's now the Fed that's back in focus. In fact, we're now looking at a 62% probability that the Fed's going to cut in December. That's a moving target, of course, but the data does suggest that things might not be as rosy as once thought. Paul Dobson with us, our executive editor for Asia markets in Singapore first. Paul, it looks like some solid footing for risk assets going into the Monday session here today, Paul.
Early doors, but so far so good, I guess, David. We did have a little bit of a wobble in the first hour of trading where Bitcoin took a little bit of a dip and the Kospi went with it, but it's come back up higher again. And I think really the driver is that Fed bet. Really interesting, my stocks colleagues telling me the moment that the Fed odds dropped below 50% a couple of weeks back, that was really the sort of starting gun for the down leg that we saw in equities in the US and globally as well. So the fact that there's now that hope again that the Fed may cut interest rates in December after all, that seems to be giving the market a little bit more confidence. And the thing is that Williams is important because he's seen as quite close to Jerome Powell in terms of view. So if he's saying he sees the scope for more cuts in the short term, then maybe the Fed governor is with him. And maybe if that's the case, we're around about 6-6 in terms of votes on the FOMC for a cut. Quite a lot of people have said they wouldn't really favour it. But if Powell is one of those 6, then likely he will be able to sway a few more into that camp for another cut in December. If not, then perhaps a dovish meeting that sets the stall for more moves in Q1. And so the market is taking that as a little bit of reassurance.
Reassured, but to what extent, I'm wondering, because if you take a look at options markets, for instance, they're signaling a growing anxiety. And I think as well, just generally, when you've got the market positioning this heavy, is there any sort of temptation now just to lock in the profits?
Well, I mean, if you haven't taken that temptation over the last couple of weeks, what have you been up to, Belle? Because the market has been showing you that there's volatility there and an opportunity to do that. On the flip side, I think there's a very big split at the moment between those that are saying, no, we're going to head for a deeper correction. We saw some comments on that on Friday that were well read among our customers. But then at the same time, you do have people thinking that this is a dip and that there are going to be dip buyers coming back in at some point. The market typically does well at this time of year, right? We usually have that Santa rally. We haven't seen so much of it so far. But so I guess there's scope for us to go either way from here, depending a little bit on, like you said, momentum and positioning and how much that starts to correct. Bitcoin obviously has been having a bearing somehow on the rest of markets recently, so people are still nervously watching what happens in the crypto space. But also, there's that prospect, especially if we firm up our conviction that the Fed will cut after all, that the market could continue to push higher from here.
Yeah, as you say, Bitcoin prices going back down to that 86,000 level. But that was Bloomberg's Paul Dobson there. And let's shift tack now to another major story this morning. And that's Japan planning to deploy missiles to a southern military base that's close to Taiwan. It comes amid tensions between both places. That's over comments Sanae Takaichi made about the island. Let's bring in our China correspondent, Min Min Lo. So, I mean, Min Min, it goes without saying, really, that this is something that is likely to provoke quite a strong reaction from China. What are we hearing?
Yeah, definitely. This is something to watch out for, what China would do, but I suspect they might respond with countermeasures, potentially more military drills close to Japan. But this was the first trip by the Japanese defense minister to Yonaguni, which is an island just east of Taiwan, about 100 kilometers to the east. And actually, on a clear day, you can see Taiwan with your naked eye. So it's a very strategic position. And the Japan defense minister is saying that they are planning to deploy missiles to this area. Now, we all know about Okinawa, which is the larger island further to the east that hosts a U.S. military base. And so far, recently, there has been a U.S. training that moved some of the supplies from Okinawa to Yonaguni. And of course, this is something that shows Japan's concern over, China's aggression, its threats over Taiwan in the region. And it's also part of Japan's military buildup along the southern island chain.
Now, both parties were at the G20 summit, yeah. So did we see anything from that on the topic?
No, Takaichi was clearly sort of keeping a distance from Premier Lee, and it was well telegraphed ahead of time as well. We knew that China did not intend to meet with Takaichi. Takaichi mentioned that this doesn't mean that she's closing the door to dialogue. In fact, Japan is calling for more dialogue. This comes after China just submitted a letter to the UN saying that they are vowing to resolutely defend themselves if Japan dares to intervene militarily. And Japan is saying that all the claims from China about Japan changing its stance on Taiwan is all completely baseless. So you're seeing that war of words ratcheting up. The Chinese embassy in Japan as well posted on X saying that it has justification to defend itself without needing approval from the UN, citing this World War II era clause, the enemy states clause under the UN Charter that used to apply to Germany and Japan. But Japan is saying that this is essentially obsolete by this point.
Min Min, thank you. Min Min Lo, our China correspondent there. Right, just to tell you what's ahead here on shows, we have a very big interview coming up in a couple of minutes. Of course, Lenovo CFO Winston Cheng will be joining us to talk about the recent earnings beats. There's a very specific AI angle to them. They've broken that apart as far as the revenue goes. So really just a juxtaposition against the whole AI conversation that's taking place. And yeah, who remembers memory? Yeah, okay, pun intended there. All right, coming down to the open of trade in Greater China, Shanghai, Shenzhen, and here in Hong Kong, 17 minutes away. Futures are punching higher. This is the China Show. Good morning.
Right. Lenovo Group posted better than expected revenue for the September quarter. The company says that was thanks to its increased market share in global PCs and robust demand for AI servers. Let's bring in Winston Cheng. He's CFO of Lenovo. So Winston, thanks so much for joining us in the studio this morning. And I think we can get started with sort of a big picture question we're seeing in the market right now, which is the concern we're getting from a lot of companies around memory chip prices, and that's something that could have an impact across your different business divisions. I know that as a company, and you spoke about this in the earnings call, about having a lot of those contracts in place already, your supplier contracts that are sort of secured for at least the short to medium term, and being a big buyer as well. But what's the impact that you see it having on your company, and when do you see it having an impact as well?
Yeah, we've actually have a lot of experience navigating through different supply and demand dynamics. Of course, the COVID period being one. And of course, I think also 10 years ago, I think there's also some shocks in the market. I think with respect to this current environment, our revenue gains and our market share gains have been very, very significant part of this. Because if you recall, back in June, probably a lot of people were talking about pull ahead demand from the US, especially with respect to the tariffs. Yeah. And therefore, they were seeing a second half probably slow down. Now, we were really questioning whether the market was right and we were the one wrong, but we continue to see order load very strong. And you see that in terms of our September quarter being very, very strong. And we capture a global market share, the highest ever, 25.6%, right? Even higher on the AI PC front, on the 31% share. So on the back of those strong revenue growth, we've been engaging with the suppliers, so continue to buy. And so I think that's been very helpful. We also saw memory prices going up. And so for us, we also been holding longer weeks of inventory in terms of critical components. So I think that's also there to position to fuel our growth going forward as well.
What financial assumptions are you making going into next year? Whether or not you've secured that inventory or you locked in those futures prices on memory chips and that key cost component?
Yeah. I think the market is worried about cost and therefore damage on the margins, right?
Yes.
But I think overall, if you think about the other dynamics, which would be then the supply. So those that have the supply actually then would be able to have a position in the market. And I think we would actually say that potentially there's margin opportunities there as well in terms of both margin opportunities, but also share gain opportunities.
So what does that stockpiling look like, though? You're talking how many more weeks or months are you keeping those inventory levels?
I would say that we're probably over 50% of our usual levels.
Oh.
So I think it's a significant in terms of our weeks of inventory as it relates to critical components.
And what sort of pricing advantage do you expect that to give you then? Like, what price did you lock in at? And what's, again, going back to assumptions, where do you think prices will trend?
Well, the prices are going very, very high, of course. And I think it's been unprecedented in terms of this rate driven by the AI demand. So I think this is probably going to be a longer trend. But I think overall in the next, certainly for the remaining of our fiscal year, which is another 6 months away, plus we've got longer term contracts also in place. So I think from that perspective, we feel quite comfortable. Now, in terms of the pricing dynamics, I think currently we're there to commit based on our scale. We can deliver the best price to the market, right, and also benefit our customers. Right. So we continue to commit to that, and of course our channel partners as well, which are very important for our business. So from that perspective, really reading and making sure that we know what the end market looks like, but also balancing that to make sure that we don't necessarily favor one side or the other, but strike that balance overall in terms of our commitment to our shareholders, but also our channel partners and our customers.
Right. Yeah. It seems very clear from the earnings call and also just your comments now that, correct me if I'm wrong, that of any of your peers, you're probably in the best position to, let's say, manage that upward increase in cost pressures. So the next 6 months, this fiscal year, can I ask a direct question? Are you raising prices or not raising prices on the back of those costs? What's the plan?
I think for us, we've been looking at potentially, depending on the channel inventory levels and other aspects, we would then adjust accordingly. For the near quarter, in terms of the fourth quarter of the current calendar year, we're probably thinking that it's still very strong in terms of the market growth for us. Relative to the rest of the market. We've been going very strong premium to market. So from that perspective, we can still lend our scale, especially coming to the holiday season. I think we want to make sure that we make sure everybody have a very good holiday season to the products that they can buy. So I think we will try to maintain that price.
Understood.
But going into 2026, you are planning price hikes?
I think going on to it, given that overall the prices are going significantly, I think we will have to strike that balance going forward. But I think, again, I mentioned it's between price and availability. So you really have to strike that balance. So those that have the cost will be the cost in the market, right? I think that's all. But can you get the supply at that cost? I think that's also another advantage. And I think we will be able to get that supply for that cost.
Overall, how does demand look for PCs currently? In the current quarter, how are you tracking and looking at next year? It's the peak, of course.
Well, seasonality factor,
Everyone wants a nice Lenovo for Christmas.
That's right. We've been going we've been growing very, very strong, double digit. And so I think last quarter was very, very strong. I mean, the June quarter.
20%.
Over 20%. Now we're at 15%, the highest market share ever, and really balanced across the world. We can continue to leverage that to drive our growth going forward. We're seeing probably in the December quarter also continue to be very, very strong quarter. For us. I think so. Overall, I think we feel very comfortable.
You spoke on the earnings call as well about the Middle East manufacturing base that you have. What's the opportunity you see there, especially as you've got, the US approving the advanced chip sales as well?
Yeah. So I was just there in October, and it's just amazing. In February, I was there to do the ground opening, and literally it's really a piece of desert with no pipes, no water, no power. And in October, it was a full-built plant there already, without the lines yet. But we're in the process of putting the lines in right now for production, and we'll start the production in terms of the test production in December. So I think from that perspective, it's just been amazing progress. Right. Now you can see a lot of the announcements that's been coming out between the U.S. and the Saudi around AI, and I think Saudi Arabia is in a very strategic position to be able to leverage low-cost power to drive AI inferencing and training going forward as well. So I think from that perspective, we're very much aligned to the Vision 2030. We have the largest plant in the world that we have there in terms of comprehensiveness. So we have a desktop, PC, smartphones, and servers. No one plant outside of China for us do we produce all four, and we're doing that in Saudi Arabia. So we're very committed to that market, and we're going to drive the AI commitment that they have there in terms of opportunities, and to capture that revenue opportunity as well, which previously were mostly around PCs for us in the market, and now we can have a substantial opportunity, hopefully, to grow our smartphone and, of course, our server business as well.
Right. Winston, I think you also recently disclosed AI-specific revenues, which I want to ask you a few more questions about, if you don't mind staying a few more minutes, of course. Winston Cheng, the CFO of Lenovo, is hopefully being able to stay on, of course, to just continue the conversation here. Just very quickly, looking at Hang Seng Index and some of the currency right now, 710.79. We are punching higher 1% on the Hang Seng Index. We'll take a short break. We'll be back. This is The China Show. All right, going into the Monday session, I'm not ready for this week. I didn't sleep well last night. Did you sleep well? How did you sleep?
I slept okay, but I mean, it was okay. I'll leave it there.
Okay. If we enter a bear market today, which it doesn't look like we will, that might give us something to talk about. It maybe wake me up a little bit. But as you can see, the bulls are back today. Technicals, we'll look at some of these things, of course, going into the open today. We're better by 1.1%. Plus, of course, there were changes to the indexes that were announced, which we can get to later, effective December 8th.
Yeah, Innovent Biologics is one of the big additions, and one of the big subtractions from the China gauge is Haidilao, which I found an interesting one. But also, just to note, we've got a trading debut, and actually a good day if you're listing in Hong Kong, because we're seeing this stock here up around 40% in early trade. That's an Alumina refining and aluminum smelting company. All right, that's my Australian accent. We say it differently down under. But you are watching The China Show. We'll have the open next, and this is Bloomberg.
Good morning. Welcome back. You're watching The China Show. 40 seconds to the opening bell. Left side is the live shot of Lujiatui, and then Hong Kong, of course, and the silhouettes of the mountain range, and hopefully not a mirror image of the stock chart in 6 months' time. We did hit a speed bump last week on risk assets. Bitcoin had more than a bit of a wobble, including in the first hour trade this morning, but it's looking like we are doing slightly better on sentiment going into the open.
Yeah, well, I think there's a couple of things that our investors are looking at. Firstly, it's that odds of a Fed cut being back on the table for December.
Christmas gift from Powell and
Well, it could
friends.
be, yeah, because we were thinking that it wouldn't be possible at all, but now it's back to 60% odds after we had some recent Fed commentary. So that's one factor. The other factor was our Bloomberg scoop that we had on Friday talking about this possibility. Maybe Washington allows Nvidia to start selling H200 chips into the mainland market. So these are both positive factors that you see here for the mainland markets coming online this morning. Also sort of reversing, as you said, we had that weakness into Friday. We saw the Golden Dragon Index doing a bit better as we came through that Friday session with the Bloomberg News. But let's shift on, take a look at Hong Kong in the open this morning, because we're wrapping up earnings season, but there's two big names we're watching this week. You've got Alibaba and you've got Meituan as well.
Yeah.
And they're going to be very interesting to watch. Pardon?
I'm not ready.
You're not ready? Okay, we've got a couple of days, because actually Alibaba's first, Meituan is on Friday. But, I mean, the big thing is the food price wars and also quick commerce wars that you're seeing really ate into JD's bottom line, and probably will do the same for Alibaba and Meituan. But that's the focus there. Today in the session, it's also the reactions we get to the index changes. There's a couple of ones that we're watching in particular. So Innovent Biologics being added to the Hang Seng, HSCEI as well, Leap Motor to Hang Seng Tech. Haidilao, though, as we said, has been removed from the China gauge. So, again, just some of the different movers that we're tracking. And we're continuing to watch Lenovo today as well.
Yeah, absolutely. In fact, still with us here on set for some final thoughts. Winston Cheng, of course, CFO of Lenovo. I left a horizontal line out there. Winston, thank you for sticking around. It's the first quarter that the company has disclosed AI-specific revenues. Like, tell us why you did that, and how do you figure out what AI-related revenues are?
Yeah, actually, if you track Lenovo going way back, it happens that we have a 10-year cycle in terms of planning. 2005, we acquired PC business from IBM, and I think that we went global. 2015. We acquired Motorola's smartphone business and x86, which gives us different product lines in terms of the value proposition we have today. And that enables us to capture the AI opportunity. 2025, we closed the transaction with Alat, and we have a strategic partnership there, but also happens to be the AI decade. So for us, we're calling this the AI decade, and for us, both internally and also externally. Internally, deploying AI across the board, where today we are best in class in terms of supply chain. We actually have our own AI agents to track and enable our efficiency of our supply chain. Right. And then from an external perspective, in terms of that AI opportunity, where we're levered to AI PC, AI smartphones, and devices side being very important channel for AI deployment going forward, and of course, to the direct to consumer, and of course on the infrastructure side, even more so today with training, and later on in the enterprise and SMB with inferencing. So we're well positioned within our ISG business and our SSG business to deliver that to the market.
You mentioned this is the AI decade, so I feel like I know maybe the direction you'll take this question, but the AI bubble, I mean, we've spoken about rising component costs, and maybe that's sort of one of the impacts or the effects of an AI bubble, but what's the sort of trajectory for it over the coming months?
The end demand is very, very solid, but if you look at the server market, which has already grown several times in the last 10 years, and if you look at the top 6 hyperscalers today, really having a next 6 year spending, I think something like $3 trillion, those are backed by various fundamental demands and training, right? So I think that is very, very fundamental. The next wave of what they call the Neo Cloud Service Provider, the NCPs today, I think is funded by private market, but those that have strong offtake, right, in terms of the revenue that's already there in place as they're raising the funding, we're very, very comfortable to do business with respect to this group. And also a lot of other groups that are coming onto the market. So we're really looking closely to enable our business to be able to capture this opportunity. But I think a lot of the bubble could be potentially in terms of the run-up on the valuation side. But the fundamentals of the industry, I think, is a long-term trend.
That's helpful to know that on the ground, you know, where the rubber meets the road, that doesn't seem to be permeating as much. Winston, thank you so much for the time. Have a great week ahead. Hi to your team for us, please. Winston Cheng, the CFO of Lenovo. Let's bring in Helen Zhu, Managing Partner and CIO of NF Trinity, is here with us on set as well to just help us set up for the markets week. Why don't we start off there? This AI bubble, this debate. You could make a case on the bear side, you could make a case on the bull side. Which side are you on?
Well, I think the main concern is really on two fronts. One is the private sector, private market valuations, which has gotten quite large in the recent, few quarters. I think there's no real debate. Everybody realizes that whether you're looking at late stage growth investing or even more recently early stage investing, the valuations have gone to quite high levels. So that is one concern to set aside. Obviously, there is some correlation between private market and public market valuations. But actually, if you look at most of the public market stocks, the multiples are not crazy. They're not like internet bubble type of levels or anything like that. Assuming that they can deliver the type of growth that people are expecting after 1 or 2 years sustainably, then on a PEG basis, they still actually look okay. So the key question then is, can they deliver that growth that's currently forecast by the market? Now, in the recent period, there has actually been upward revisions in terms of CapEx spending and the pace of investment into the space. So actually, most of the ecosystem and supply chain has gotten upward revisions. Now the question is, looking forward, is it going to be flat versus expectations, or maybe slower versus already very high expectations? And that's the second bubble that people are worried about, which is this CapEx bubble, right? Now, I think for most of the hyperscalers, there's a huge land grab. Everybody realizes the longer term potential is immense, and therefore, even if the AI application ROI in the near term is still not so clear, people are very much willing to spend, aggressively in the next 1 to 2 years. But I think the reason why there has been a little bit of a pullback recently is because the market has this new concern, which is, wait, even if everybody wants to spend very aggressively, are we going to run into supply side bottlenecks? Like, for example, is there a power problem? Is there a labor problem installing the power or installing these data centers? CoreWeave reported results and pushed back their CapEx plan by 1 or 2 quarters because they said that there is data center shell supply side issues. So that's something that people are worried about. It's going to happen, but will the pace actually be slower versus previous expectations? And if there is a meaningful slowdown in terms of the pace of CapEx, then I do think the market is kind of set for a little bit of a consolidation, given how much has already gone up on this AI theme.
How much then is that sort of concern? Because I think that post Nvidia earnings last week, it does seem like it's been a little bit soothed, at least those sort of more like top line fears, like let alone digging into more of those depreciation costs and that other issues that you just mentioned there. But it seems like the focus is more on the Fed. So how much longer do we stick with that?
The Fed issue is definitely the second thing that's been weighing down on the market, right? So there was very high expectation about a number of rate cuts, especially given kind of like the changes in the Fed that are upcoming, et cetera. But more recently, it seems like the administration's concern has expanded further as well to the inflation that U.S. consumers are starting to feel, right? Or have been feeling for quite some time. So it's very much a K-shaped consumer population in the U.S. where the rich and those who are benefiting from the increase in property prices and stock markets are spending more aggressively, as in luxury and so on, travel, etc. But then the mid to low end, the vast majority of the voting population is actually getting hit pretty hard, and now getting hit even harder because of the import tariffs coming from what's been implemented in the middle of this year. So I think the administration is getting more aware of this and more sensitive to it going into the midterm election next year, and therefore some of the dialogue has been, well, if the data isn't that bad so far and inflationary pressures are still around, do we actually push back some of those rate cuts? But that said, I do think that there's likely to be another rate cut in December. Maybe there will be a little bit of a pause in the beginning of next year, but then the new chairman comes in the second quarter, and we're probably going to see more and more strain in terms of the payroll numbers as well, because basically, there's quite a lot of impact from AI-related productivity gains already. And so we're already starting to hear about reduced demand for coding talent in both U.S. and China. I think that will start to intensify as part of the dialogue next year, and that's probably going to put more pressure in terms of overall employment concerns.
The market seems, to your point, very sensitive to even the daily changes in pricing around the Fed and what swaps are telling us. Do you think the markets are at such extreme levels that we need the Fed to cut interest rates for this bull market to continue into next year?
It's more of a sentiment indicator and an indicator of the attitude of the Fed overall. It's not just about whether the rate cut is a quarter earlier or a quarter later, et cetera. It's also about the indication towards whether, for example, the cessation of QT is eventually going to lead into QE, and how willing the Fed is to kind of put a put on the overall market and economy slide. It's also about where the terminal rate is going to end. Right now, people are forecasting 2 handle by the end of 2026. A couple of weeks ago, it was still back to 3 handle, et cetera. So I think it's not necessarily just that one rate cut. It's really more about the indication of monetary policy in the coming period.
Chinese stocks, how do they behave next year? Do they behave as part of a broader equity cohort, or do you think that's almost a natural hedge, something that's not correlated to the broader trade going into 2026?
I would say probably stable next year. This year Chinese equities have had a tremendous bounce, despite the fact that the trade war has gotten worse and despite the fact that we've actually had meaningful deceleration in terms of actual macroeconomic indicators, in terms of investment in particular. Exports have been a little bit strained and consumption has really decelerated versus previous expectations as well. But there's more household savings that are moving into the equity market as the government had wanted, and there is meaningful support, especially for the large caps in the index, which are the dividend yielding stocks, which are still yielding 4 to 5% in the A-share market, which is much higher versus what you can get from a bank these days. So I do think that puts a bit of a floor in terms of the downside risk for the overall market. But in order for things to move up more meaningfully, you do need to see a couple things. One, you need to see consumer sentiment stabilize, which basically I think is going to be partially dependent on the property market and pricing stabilizing, which is still elusive to some extent. And secondly, some kind of positive news on the trade front. Now, maybe the Supreme Court in the U.S. will challenge the Trump tariffs more. If so, that would definitely be positive for sentiment towards China, or some kind of incremental progress with Europe and the rest of the world that gives people more confidence that Chinese exports can be more resilient despite all of the issues with the U.S. I think those would be the elements that we have to watch out for.
All right, Helen, thank you very much for joining us this morning. That was Helen Zhu, their managing partner and CIO of NF Trinity. And just as we've been speaking here, there has been some breaking news crossing the terminal. It is a leadership change at GoTo. This is a large Indonesian internet platform company, but essentially they've announced a succession plan or some changes here, so appointing a new CEO to replace the outgoing Patrick Walujo. So this is a shift that's just been announced this morning. I'm not going to tie it to this, but I will say there has been some reporting, including from Bloomberg, on this. We had a scoop recently saying that there has been a push by some of GoTo's backers, like SoftBank, for instance, Provident Capital Partners, that had been looking to replace the CEO. So it certainly could be a dramatic twist. There are talks about an acquisition by Grab as well. But that's just some background, not necessarily linking to this, which is leadership changes at GoTo.
Yeah. Okay. More on this and more details as they come through. Certainly big news on many, many fronts, on different aspects, really, interwoven in terms of the themes there. Right. Just ahead, the U.S. says it is making progress on a peace plan with Ukraine. The details about those talks in Geneva. Just ahead, this is Bloomberg.
Well, the U.S. Secretary of State Marco Rubio says President Trump's proposed deadline to secure Ukraine support for a U.S.-backed peace plan by Thursday is not set in stone. Rubio's comments come after U.S. and Ukrainian officials met on Sunday in Geneva, and as Trump pressures Kyiv for a deal.
It is probably the most productive day we have had on this issue, maybe in the entirety of our engagement, but certainly in a very long time. But work remains, and because this continues to be a working process, I don't want to declare victory or finality.
Let's bring in our senior editor, Balazs Pence, is with us to help us understand the details here. So how close are we then?
It's hard to say, but it certainly looks like they are making some sort of progress. The Secretary of State saying that they're willing to move the deadline, the November 27th deadline around, suggests that they feel like they can move forward, that there's some progress being made. And both sides signal that they are happier with what happened in Geneva than previously. The Ukrainians also signaled that some of their issues, some of the important issues for them, have made it into a revised proposal, a revised framework. So, as the Secretary of State said, there's a lot of work still that remains to be done, but it does seem like there is some progress being made.
What are the sort of sticking points, and what is the work that needs to be done? I mean, this seems to have really taken Ukraine by surprise. Like, did they even have enough time to prepare, really?
Yeah, our reporting shows that the original proposal, the 28-point proposal that the president rolled out, was mostly the result of work between the U.S. and Russia. So the Ukrainians were a bit in the dark on that. There are certain things in that it's hard to see Ukraine accept. This includes giving up some territory that Russia has never been able to conquer. That was part of that. They want reassurances on their security going forward after a peace agreement. There are certain points that need to be worked out in terms of how any ceasefire or a cessation of hostilities might work. So there's a lot of work that still needs to be done, but it looks like the sides are at least engaged. The U.S. is engaging Ukraine on this one, so there's a chance that they can get some of their points across.
Yeah, and as we have in that scoop, you've also got reporting around European officials racing as well to offer a counter-proposal and try and buy Ukraine a bit more time on this front. But that was our senior editor there, Balazs Pens, joining us. And to some other stories that we're following around the world this morning, well, Israel says it's killed Hezbollah's military chief in a rare airstrike on Beirut. That's an almost year-old ceasefire deal with the Lebanese government that's wavering now. So the IDF says the attack killed Hezbollah's chief of general staff. That's the militant group's second-in-command, according to Lebanon's health ministry. The strike left 5 people dead and 28 others injured. Severe flooding across central Vietnam has killed 90 people and left 12 others missing. Vietnam's Ministry of Agriculture and Environment says more than 1,100 homes were damaged and at least 80,000 hectares of rice and crops destroyed. Early estimates put the total economic damage at about $340 million. We'll have plenty more ahead. This is Bloomberg.
To keep pushing the frontier, we need to build these new types of AI infrastructure hardware at scale, and I'm excited for that to happen in the US and with Foxconn. Foxconn's experience building complex infrastructure and hardware at massive scale makes them the ideal partner for this, and I'm looking forward to exploring together what this can look like. We'll share insight into emerging hardware needs across the AI industry, and Foxconn will use that to design and prototype new equipment that can be manufactured in America.
That was Sam Altman speaking at Hon Hai Tech Day in Taipei. And of course, this was a day where it was really the big announcement was this partnership we're seeing between OpenAI and Foxconn, because these companies have worked together indirectly. They're now going to be joining forces directly and to work on the sort of hardware that's needed to build out these AI data centers. So we had a really great conversation with Chairman Young Liu from Foxconn or Hon Hai, talking about the scale of this partnership. He's saying that they're looking to spend up to $5 billion. I was very curious to understand what's the actual opportunity you see. He wouldn't comment in terms of financial ones because he was also not wanting to contribute to these concerns around AI bubble fears and fiscal spending. Yeah. But I did really push him on the compute power and how much capacity they'd be looking to add. But take a listen.
The gigawatt per week will be the goal.
Okay, 1 gigawatt per week.
Per week. That will be Sam's goal. Okay. But we can start with 1 gigawatt per month.
So you think you can add 1 gigawatt per month next year?
Starting the second half of the year.
Second half of the year, so you think you can add 6 gigawatts next year?
I'm not sure. It really depends on our study and our new way of doing things. It takes time, but eventually we're going to get there.
Let's talk about then this opportunity in the US, because as you said, part of this is about Make in America. It's very ambitious. What's the capex that you need to also dedicate to the States?
The capex-wise, it's in maybe 1 to 5 billion to start with, to build the factories, to build R&D centers, but to build the working capital required to build a data center. That's totally different. That requires huge amount of money.
Yeah.
And with that, we are going to work with SoftBank.
What are the biggest challenges with scaling up in the US?
Shortage of labor. As I mentioned to you, it's not the labor cost, it's a shortage of labor.
Yes. How do you get around that? What are the conversations like, and what are the biggest shortfalls that you see?
Yeah, we have to work closely with schools and the government, which we were very familiar with when we build factories all over the world. We had to work with local agencies or local government to get their people ready for the kind of job that we require.
There you go. That was the Foxconn chair in Taipei on Friday with, there we go. All right. Just very brief look at markets. We're doing well across risk assets, generally speaking. We'll get into the minutiae a bit later on. But just in terms of the stock movers across the greater Chinese market, so we're looking at some of the chip plays. This might be down to Nvidia. Again, when I say again, the notion that the Chinese market is a market that is feasible to get into, and of course the opposite effect as far as the reaction in the markets across the Chinese names are concerned. Casinos, 10.8%, I believe, was the pickup as far as the data goes, really helping things along. There we go, visitor arrivals for October. We're better by about, let's call it 1.5%, splitting the difference between the four on your screens. And very, very quickly, have a look at where we are as far as the Chinese dashboard. The Chinese dashboard is concerned, and we are looking at some decent gains there. You know what? Since we have a bit of time, in fact, I want to ask my producers if you guys could, if the Hang Seng China Index chart is ready there, because I want to show our viewers the moving average that's in focus today following the week that we had last week. And I think the reason that should be quite relevant today is there is a technical aspect to the bounce we're seeing today. We cut through some moving averages like a knife through butter. And the 200-day moving average on the Hang Seng China Index specifically is coming up on your screens. It might be a level of support to watch. It also just happens to be the low of the August 28th session, which did see quite a big drop as a level. And it does seem like we're bouncing off that level as we speak, going into the thick of this week. Yeah, great level to be watching here, and a great one to point out, because Helen Ju was just with us sharing her outlook for China stocks going into next year. Yeah, she was. And what was interesting about the correlations in the last few weeks is, when we are getting on sort of a rally across global markets, China tends to not play along in terms of correlations. When things are on a downdraft, correlations snap back together, which I think was the point that asset allocators are trying to figure out. Is it one or the other? Plenty more ahead. Suffice to say, this is the China Show. Welcome back to the China Show, taking a look at the Hang Seng half an hour into the session. And we came into the day and we were wondering, would there be any chance of us going back to that bear market territory for the Hang Seng Tech? But we're really lifting off that. So it's sort of, we had that already indicated in the Golden Dragon Index on Friday, but seems like there's some optimism, maybe not for the chip stocks in China, but there is optimism around maybe rapprochement slightly between the US and China in terms of Nvidia chip sales, plus you're adding the Fed into the conversation. Yes, and I think that was really what, I think when you look at how the price action and the charts on Friday played out in the US session, it was quite clear once we, the consumer confidence, the consumer-oriented data, to be more specific, around the U.S. consumer and how that changed the complexity, the appearance of risk assets, and that bounce we saw, and then you had Bitcoin coming through, and then you had this gain across U.S. Treasuries, underscores that, on most weeks recently, the Fed did not matter as far as the macro picture was concerned. It was geopolitics and earnings, but it's really come back in a big way that markets are really watching for as far as pricing goes. And yes, it was really the comeback of the Fed put that is perhaps leading to why we're seeing this one today, Bill. Yeah, that's right. I think you're really getting it indicated there in those more tech-heavy gauges. The Kospi, Taiwan as well. They're the outperformers in the session. Japan is shut, of course, another tech-heavy index. But again, a pretty strong start to the week here as we also look to wrap up earnings season. I think what's really notable, though, and what's been interesting to watch is Bitcoin and the sort of bearing and the price action we're seeing there even over the weekend. Yes. You know what? And it's really been a decent leading indicator for risk assets, right? And the fact that the fact that it's phrased this way is quite still funny to me. I can't get my head wrapped around it, that we are rallying into 86,000, and we were 81,000, of course, was a line in descent. At one point, I thought 80,000 was about to go, and then, of course, we had this turnaround in risk appetite, and this is where we are as far as that's concerned. So we are getting a bounce across U.S. assets today. Now, just taking a step back, right, amidst this seeming wobble in risk assets, Jeeton Martin Adams, who was with us, of course, at Bloomberg, she's now at HB Wealth, chief market strategist there, put this out, in fact, on LinkedIn. At least this is where I saw it over the weekend. This note that when you look at, say, the moving averages, that's still very much pointing to the upside. So the longer-term equity bull market remains intact. But short-term, most, if not all, the technical indicators as far as momentum goes are pointing to a deepening in the correction over the short term, because we haven't quite squeezed out and we aren't back all the way to oversold territory. So when you look at two things, MACD and, of course, RSI is what Gina's pointing out to, what we've done is we put this on a chart for you to actually have a look at that. And the gap between, so just to point out, what color is that coming out as? Purple? Pink?
Pink.
Between? Pink. There we go. Thank you so much, Belle. The gap between 41 and the green line, which is, of course, oversold territory, and us flipping into negative as far as the other momentum gauge is concerned, does point to more room on the downside amidst, of course, this as you can see, this is a bull market that takes you all the way back to 2020 as far as the chart goes. So yeah, just in other words, just watch the technicals as perhaps a trading indicator here, given where we are so far and expectations over the next few days or so, Belle.
Yeah, I think there's the technicals, and then there's also just the earnings picture as well, because we're at the tail end of the reporting season in China, but you do still have some big names on deck this week. So coming up, we've got one today in Hong Kong, but also across the week, I think two of the big ones to watch are Alibaba and Meituan. That's, of course, the story around the food price delivery wars. You're seeing Pony AI and WeRide, they're going to be really interesting to watch as well, given you had both of those companies recently listing again in Hong Kong. But, of course, they're already listed on the NASDAQ as well. Li Auto, NIO, I mean, just some of those more of those auto stocks to go, plus Win Macau. You had those better visitor numbers in Macau. Chow Tai Fook is going to be a very interesting one to watch, given that run-up you've seen in gold prices. And this has been an unloved stock had been an unloved stock for a long time. But as Asia does near the end of the reporting season, Bloomberg Intelligence sees earnings across Asia-Pacific ex-Japan coming in better than expected, so pushing profits to around the highest levels since the end of the GFC.
Yeah, that really comes amid this. I think it's almost on a daily basis we keep drumming up these concerns over, valuations and multiples that have weighed on, that's an understatement, tech stocks globally. For more on the story, let's bring in Marvin Chen, our Bloomberg Intelligence equity and strategist here, of course, to help us understand so I think it's important. Marvin, by the way, nice to see you. Good morning. Good morning. It's important to distinguish, right? When these people talk about a tech bubble, it's usually not all the case. It's usually the Mag 7 in the U.S. But how does that notion and narrative permeate into the Chinese tech space?
Yeah, I mean, obviously there's going to be some knock-on effect for China, but if we're talking about a valuation bubble or an AI bubble, I mean, China valuations are, for the big tech stocks are trading at roughly 25 to 50% discount to the Mag 7, and overall Chinese equity valuations after the recent decline are just hovering about average. So, really we don't see a valuation bubble in China, and Chinese stocks are just less frothy than U.S. peers.
So then the market activity we've seen recently, because it has been, of course, very volatile, but people have been talking about a healthy correction. We were talking about bear market levels as well. What's your anticipation?
Yeah, if we look at our China, we have a China sentiment indicator. It's currently trading at around balance. So, it hasn't fallen into panic that we saw in, 2022, 2024. So this suggests that the recent correction is still healthy and sentiment hasn't reached extreme levels yet. It is interesting to note that our indicator did hit exuberance over the summer, which is typically associated with negative forward returns. So this recent loss in momentum is not that surprising based on our indicator.
So how are we set up for 2026?
Yeah, so I mean, this year, the China rally has been a valuation-driven rally. China has been seeing, earnings downgrades as price levels risen this year. So, next year will really be about earnings recovery and those companies that can deliver growth. The good news is that China tech is expected to see an inflection in 2026 based on consensus. Earnings is expected, growth is expected to accelerate to, double digits next year. And, the recent supply side reform, anti-involution should help kind of lift the profitability of the old economy sectors as well.
Taking a look at shares of GoTo this morning in Indonesia. This is the internet services company over in Indonesia. But essentially there has been a leadership reshuffle this morning. So they've named a new CEO to replace Patrick Walujo. So that move is expected to speed the takeover of the company by Grab. This is something that we've been reporting on. We had scoops on this at Bloomberg. So you're seeing that stock just marginally higher here. So the COO, Hans Petua, will be taking the helm from Patrick Walujo. So the company putting that out in a statement, though that does actually require shareholder approval.
Yeah, okay, so that, I guess, would be the gap between the current situation and whether or not it actually becomes eventual reality. From this specific stock, one other thing we're tracking right now is its trading debut here today. As you can see, Chongqing Industries, if in Australian, does what?
No, I mean, I just said aluminium. It's a word that really continues to trip me up because I have to remember aluminum.
Yes. With an M. No, that's not, of course.
There's an I that's missing. Anyway,
there's an I
it's a good day for a listing in Hong Kong and certainly a better market sentiment as well, given that you have had, of course, a string of listings recently that haven't performed quite as strongly. WeRide and Pony AI stand out, but of course, very different industries as well. Yeah, we are on watch. Just speaking of generally speaking, it's been a fantastic year. We are on watch for more, of course, here in Hong Kong, including the JD.com supply chain tech unit on your screens, Jindong Industrial, see Watson's. You have consumer pharmaceuticals, for example, there. Look at some of the upcoming names. And by the way, if you don't believe us, just look at the HKX website, which has, I think, a lot of public information around just the amount of stuff that's been filed and likely in the pipeline. Assuming, of course, an asteroid doesn't hit Earth, that's going to come online, of course, going into next year. Joining us for more on what this year has been and what the outlook is for 2026. Here on set is Ivy Hu, Head of Equity Capital Markets, or ECM, for APAC at UBS. Good morning. Nice to see you.
Good morning.
How much sleep have you gotten this year? How busy have you and your team been?
It's a crazy year. I mean, like, especially in Hong Kong market. Yeah. The IPO market is #1 ranked globally. So think about how many stuff we have. And not only IPOs, the follow-ons this year alone is more than last 3 years combined. And then converts, it sets a record year for Hong Kong Stock Exchange. So every product in the equity capital markets has been booming this year. And crazy year for the whole teams and the street. Does it continue then into 2026? The momentum is not showing any signs of stopping. Usually as we go towards the end of the year, things will stop a little, slower down a little bit. But then if you look at last week, we also priced at 1.5 billion Hong Chow placement. And that was very well welcomed by the investors as well. And then moving into 2026, you see already more than 300 companies publicly filed for its Hong Kong IPOs. Just to give you a comparison, this year there were 85 companies priced. And then 300 companies on the pipeline. And then we have a lot of companies already in the preparation phase for their January accelerated product offerings as well.
Okay, yeah. What type of conversations are you having currently with the ones, and you don't have to go into details because some of this is confidential anyway, about to hit the market, but do people have concerns over valuation? Are you still confident you can price things at the top end of the range and still have a good day the first day? What is that like recently?
It also depends on how you set the range. But
that's part of your job too, right?
Yeah, it's part of our job. But then for sure the market sentiment and momentum is there. And if you look at the valuation for the region, it's still not high compared with historical levels for MSCI China. And if you compare MSCI China with the global, the world index, it's still at a discount. So the valuation by itself is not very high per se. And also I think the foreign investor positioning is still light relative to what we see in 2020 and 2021. So I think so long as we price the things sensibly, the good aftermarket and everything will continue.
What's the pipeline though? Because a lot of it has been sort of A to H deals, some also coming back from the US. So what's the breakdown going to look like?
No, exactly. I think for this year, it was dominated by A to H, US back to Hong Kong, spin-offs, right? So these are all things on the back of existing listed companies. For really brand new company listings, there are not so many. There are only 3 companies, more than $500 that are brand new listings in Hong Kong. But then moving into next year, we do expect to see pickup activities in that. Of course, we will see continuous homecoming, A to H, spin-offs. But then for the brand new IPOs, especially the sizable ones, we do see a lot of them in the pipeline already. So it's going to be even more diversified and balanced into 2026.
In what specific sectors do you think we'll get the brand new ones next year?
I think the TMT, consumer, and industrials are the important themes for this year. That's going to continue, and including for the brand new ones out of these sectors. Yeah.
What sort of also the conversation like with companies? Because there's some, for instance, we're hearing, I mean, Pony AI and WeRide, it was very competitive and ended up listing on the same day. There's ZAI, Minimax that both want to list, and again, like there's a bit of a race. What's the sort of pressure and the conversations like with some of these companies, particularly in the tech space?
Yeah, I think for a lot of these companies, so long as they get the right approvals in process in place, they just want to get the process rolling and get things done as soon as possible. They don't have to be worried about the demand and investor interest, so there is no particular reason for them to wait as well. So I think it's just that everyone is trying to grab the market window whenever it is there. So,
Speaking of, let me just borrow that last thing you mentioned, grab this window of opportunity. Yourself and many of your peers, of course, have had tremendous business. What's the outlook for fees? We've seen a lot of pressure on that recently.
You mean in terms of fee percentage or in?
That's open-ended. Yeah. What's the outlook in terms of the commercial side for the banks here? Because there's a lot of activity. There's a lot of activity, but there's been a lot of competition too.
It's a lot of competition, a lot of activity, but I think that. For sure, the large volumes helps on the fee general. When it comes to the fee rate, yes, I think for some of the product types, it's a lower rate in general for the A2H or homecoming, for example, because but technically these are also like listings for already listed companies. But then I think that for the more normal like new listings, the normal follow-ons and converts, I think the rate is at the normal level versus the historical.
That's good context.
Yeah, so I'm sure that the street is having a better year for this year. For sure, much better versus
people are probably counting their bonuses already ahead of the March announcement, but we can talk about that.
I feel like bonus conversations.
You tell me.
Someone's wondering too.
Then I guess going back to that around the fees, do you think that you're going to see even better numbers than next year if you do have more of those original listings as opposed to A to H?
Yes, I think on the back of more listings and more like new listings and also continued strong momentum for follow-ons and converts. I hope that next year is going to be an even better year than this year. At least the momentum is not stopping yet.
Right. Yeah. What's your outlook from your conversations on the ground with clients on the outlook for the A-share market?
The A-share market.
A-share market and listings there. Because we've seen, to your point, A to H. But in the A-share market, people seem to have ignored the market for now.
Well, I think for the Asia listings, it's also driven by regulatory approvals, etc., right? And then I think if you look at the secondary market, actually people have not ignored that market as well. There are continued foreign inflows into the Asia market. And actually, as a house view, we value both Asia and Hong Kong stocks equally going into next year. Of course, this year we see that there is a meaningful diminishing of the gap between A to H. I think this is on the back of a lot of foreign attentions back into China, Hong Kong, and then the valuation gap for A to H has been, beginning of the year, has been quite big, so it has been narrowing. But then into 2026, we do see that investors continue to be focused on the region that includes both A and H. But that said, of course, a lot of the quality companies in A will continue to come to H, and for those already had an H listing, they will probably do their full-on issuance or converts in the Hong Kong line, like what SF did this year, right?
Yeah, Shengfeng did that too, yeah.
What's the hold-up then on some of the ones for the mainland? Because I think Unitree, for instance, is a name that stands out. That's one of the most promising humanoid robotics companies, and there's a lot of investor interest in this one as well. You've even got a report out from Citi saying that humanoid robots will see exponential growth in the next 12 months. But how come there's sort of delay? Because this is a listing we've been talking about for several months now.
Yeah, I think it's probably market has so much of an expectation and attentions. They are going through their own process, just like there are companies in Hong Kong that are going through their own process as well. So let's continue to monitor and see when it comes out. Yeah.
Before I ask you about the rest of the region, just what's the risk to all this momentum
Yeah.
In Hong Kong next year? I can't. People keep talking about, obviously, that there are a lot of bullish reasons to remain bullish, but is there a risk in your view that you think we should be cognizant of?
Yeah, because I think a lot of favorable factors this year, including the geopolitical outcome was better than we originally feared. There is advancement in innovation, accommodative policies, I think both monetary and fiscal. These are all supportive factors, but these factors, are they going to lift up the valuation to the same extent next year as this year? Probably not. So I think a lot of the stock performance is going to be driven also by the earnings and growth, the fundamentals of the companies in the region, on the back of the supportive fiscal policies and the monetary policies, etc.
The liquidity conditions too, right?
Yeah, exactly.
We just came from Singapore last week, and the only reason I bring that up is we were speaking with the SGX CEO last week, and they've also had a decent year, relatively speaking, of course, to the past few years. What's your outlook for the rest of the region outside of Hong Kong? Is there a market that stands out to you?
Yeah, I think firstly, Hong Kong is going to continue the driver of the region.
Okay.
And then
still dominant,
India,
you think, next year by looking at the pipeline?
Still the main driver,
okay.
Yeah. India is going to remain active. They have a long list of IPO backlog as well. And they have been doing well last year and this year as well. I think Korea market probably will see increased activity on the back of corporate reforms as well as their exposure to the AI-related capex cycle. And also, Taiwan, we're going to see a head start in January because they have announced a bunch of tech-related CBS as well. Yeah. So I think quite a few of the regions in the broader APAC region is going to continue to see meaningful activities into next year.
Okay. Yeah. Looks like you're going to be busy. Maybe hiring. We'll see.
Yeah.
We didn't. Oh, unfortunately, we're out of time to get into that question. Ivy Hu just now, head of equity capital markets for APAC at UBS. We're about 52 minutes into the cash market session. Hang Seng Index 1.3, 1 and 7 on the Hang Seng Tech. Asia market, let's call it range bounds. Plenty more ahead. This is the China Show. Welcome back. You're watching the China Show. Let's talk about today's big take. Interesting one. Some of China's local government financing vehicles, LGFVs, are said to have sold $3 billion of bonds in Hong Kong by offering returns that can actually be double the official interest rate listed. That's according to some investors and bankers that we spoke with. The headline on your screens. For more on this, John Leo is with us out of Beijing to talk about this tactic. John, good morning, and thanks for coming on the show. Tell us, how does this work effectively?
So the way it works is some of these local government financing vehicles, when they go to market, they need to borrow money. Their revenues, their cash flow is wobbly, it's weak. They need to offer relatively high rates to be able to get investors on board. They're at the same time, though, worried about publicly offering 16% yield on a bond because they're worried that means in the future they're going to have to pay similarly high yields to be able to get to borrow from the bond market again. And so the workaround is they will sell a bond at an 8% coupon, but then they will pay the investors either as a consulting fee, or they will pay the bank a consulting fee, and the bank will rechannel that money to the investor, so that at the end of the day, the investor is making 16, sometimes more percent yield on that bond.
So this is a practice that's been sanctioned, and companies as well have been fined that have been caught in the act. Bond investors have been asked to return the additional payouts. I mean, how exactly is this continuing to flourish?
So regulators have caught on to this practice on the mainland, so onshore, and they have cracked down, as you said. The companies that have been doing this have been sanctioned. The additional money they've paid out to investors have been clawed back. But because of this action by the Chinese regulators onshore, a lot of this is starting to move offshore. And that's why we're starting to see an uptick in this in Hong Kong, where Chinese regulators don't have the reach. and where this has been done sort of on the side. If an investor wants to partake in one of these deals, it's really, they have to know the right person. And so we expect, as this becomes more clear, there will be more regulatory action in Hong Kong as well.
Thank you. John Liu there in Beijing. Right, welcome back. All right, some news on Alibaba. We have a number now. It's relaunched, 10 million in the first week, and the market is actually reacting to this information. How long it lasts, that's not to pour cold water on this, but we are getting an initial reaction across the markets on price. I'll show you volumes in a moment, but 4% higher on Alibaba. You look at the benchmark, the Hang Seng Tech Index actually is rising on the back of this, and we're also getting a spread through as far as market breadth is concerned. So it's not just this specific stock. We're trading at 154 right now. Now, speaking of volumes, coming up on your screens, just a look at the Bloomberg terminal, just to show you and illustrate this massive pickup in volumes, is the white line that you see for this time of the day. So effectively what you're looking at here is once the news dropped, that spike in volumes now puts us on track for about 140 million shares traded for the day. And as you can see, as we started out the day without this information, it was a plain vanilla sort of session. We did get a bounce back, of course, in price, and that suddenly spiked in the last few minutes, which does show, of course, a lot of buying taking place given the information that we have right now. We'll get you more on this once we have a better understanding. But market is reacting, Bell, and reacting quite positively to this news line coming through.
Yeah, I think it's really interesting, that sort of juxtaposition you have, or that question mark. What is sort of fundamental technological change that you're seeing in that sort of widespread adoption, and what is sort of more concerns around the bubble side and the financial valuations and others looking stretched. But our next guest is Didier Sornette of the Southern University of Science and Technology, and he's developed the so-called log periodic power law singularity model. So the whole idea here is looking at different phenomena, but looking at signs of whether we're seeing any sort of bubble market activity. So he joins us this morning out of Shenzhen. Professor, thanks very much for taking the time to speak with us. And I think we can get started with that general question, especially in the markets right now. There's so much focus on the amount of spending, the level of the infrastructure build out, the demand that we see. Do you see any signs of bubble market activity right now?
So not so much in China. In the rest of the world, of course, we see that in international monetary market, in blue chips, in AI, obviously, Cisco, in some indices like IBEX, in Alphabet, in crypto, negative bubbles.
Okay. So help us understand, okay, why don't we start with crypto? Specifically, when you say negative bubble, clearly it's, I would imagine, somewhat depressed and deflated, if you will. If you could give us more specifics, Professor, what does tell you, and whether or not there are signs that we might see some reflation or inflation of crypto moving forward.
Yeah, so a negative bubble is exactly, essentially look at a positive bubble, which is this price acceleration, this super exponential explosion. A negative bubble, you just flip the axis down, and it is essentially reflecting an exuberance in the negative spirit, a fear. And when we say a negative bubble, it means that we expect a rebound. Typically for Cardano, for Bitcoin, we see that there has been a sell-off which has been accelerating, and we see a likely rebound in the coming weeks.
Okay, Professor, maybe let's take a half a step back, and I'm just curious, what goes into the model? What major assumptions go into that as you plug that in? And my understanding is fundamentals are not part of that. If you could also talk about why they're not part of your model.
Yes, as you know, fundamentals are extremely hard to quantify. In principle, a bubble is an excess above a fundamental value, but famous telling says that if you know the fundamental value by a factor of 2, you're happy. So it means it's essentially not useful. So our model uses the idea that exuberance is characterized by what I call super exponential. Everything in finance is exponentially growing. which means compounding interest, proportional growth, and so on. It's a norm. But when the rate of return grows itself, this is super exponential. So by the way, when you hear people say it's a bubble, the price is growing exponentially, they don't know what they're speaking about, because everything is exponential. It means just a law of proportional growth, compounding interest, and so on. So we are detecting the specific signatures of exuberance. It could be actually rational, for example, when you hedge risk with option derivatives, you could get this positive feedback. The key word is positive feedback. The larger the price growth, the more there is demand, which is quite surprising. But fear of missing out and many other mechanisms actually give rise to this transient explosion, which occur at many different timescales. And in addition, in the LPPLS model, there is this idea of a hierarchy of fear and exuberance. You know, there is this famous telling in Wall Street that the markets climb a wall of worry. That's actually what we are detecting in this super exponential growth.
So you mentioned about the model indicating we're going to see recovery in prices in the next few weeks. What is the level that you're looking at?
So we are not looking at levels as thresholds. We are more looking at let's say, our models do is to quantify a window where the probability of the change of regime, we don't predict crashes, we don't predict really levels, we predict times when the ongoing regime is not sustainable and will lead to, could be a crash, could be a high volatility plateau. This is what we are looking at. Trying to figure out the precise time and the precise level is out of scope. It's not possible, in our opinion. But actually identifying a window of predictability where you have this change of regime is what you can do. And it's very important for risk management. You can, of course, allocate completely differently your portfolio, hedge your risk with derivatives, or take short position, this kind of thing.
So, Professor, I never thought I'd have the opportunity to bring up the second law of thermodynamics here on Bloomberg Television. So I'm alluding to disorder and entropy here. But to your point, right, what the model, I think, predicts, if my understanding is correct, if we are near or either past that threshold of instability or disorder in price, and I wonder what your model tells you about the specific group of very large tech stocks in the U.S., and whether or not we are close, if not already, in that period of disorder?
It's a very good question. It's not related to thermodynamics, really, but your question is intelligently pointing out the fact that, okay, my view, it allows me to tell you what is my view of the market. The market are most of the time not predictable. They're high dimensional, extremely stochastic with all these influences coming in. But during certain pockets, I call them pockets of predictability, as if there is a kind of condensation of opinion, of views, herding, if you like, imitation, many processes, social imitation and so on, that collapse the dimension of the system into a much clear dynamics, what I call a pocket of predictability. So indeed, the financial bubbles, when they are close to their end, they become readable, they become more predictable. And right now, you're asking me what is going on. There's not much going on in China. In the rest of the world, of course, we see a number of bubbles, but not as bad and systemic as a few years ago.
I'm looking at your notes, and I can see you've written Dragon Kings. Can you give some more insights on what you mean by that exactly?
Yeah, so this is a reaction to the concept of black swan of my friend Nassim Taleb. I consider many of people in China and Hong Kong know what is a black swan. This is the popular view that there are events, extreme events that are unknown, popularized by Rumsfeld, the Treasury Secretary of Defense, during the Gulf War. Actually, it was put forward by Professor Knight in 1930, the fact that there are events that you cannot even know, even imagine that could occur. I consider this concept very dangerous and wrong because all crises are knowable and can be understood in advance. And the Dragon King essentially is the incarnation of this idea that extreme events, large crises in all domains, could be an earthquake, could be a landslide, could be a revolution, social crisis, a financial crash, etc., the collapse of a bridge, are extreme events that are different from the others. The king effect, the fact that the king owns a big part of the wealth of the country, is outside the normal distribution of all the rest of the citizens. And the dragon emphasizes the fact that there are special amplifying mechanisms that give rise to the Dragon King. And I thank you for asking this question, because the key idea of the Dragon King is because this large event, this crash, this change of regime, reflect maturation toward instability and result from amplifying special mechanism that what gives them some predictability to make them different from the other events. To just give an example, most of the time the crashes are maybe minus 40%, minus 50%, minus 30% over 1 month, 2 months, 3 months. This is what I do care about as an investor. I don't care about the plus or minus 3% a day that could occur, that is discussed often by commentators. And they occur through transient correlations of negative, minus, minus, a little plus, minus, 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 plus, minus, etc. And this is what our techniques are capturing, and this reflecting indeed this progressive evolution to a phase of instability, this reduction of dimensionality that you were eliciting with your analogy with thermodynamics, and this amplifying mechanism that give rise to this predictability of Dragon Kings, these great crashes that we are interested in.
And the ability to identify the canaries in the coal mine, or to borrow your phrasing, the precursor to these events. Let me just phrase the question quite simply, given a lot of this is still Greek to me, really. What is the possible trigger that you think causes the most amount of widespread pain to most asset managers out there? What is the one risk that you think we should be paying attention to, or the precursors to that risk?
Yes, so there are many risks at all time scale and so on, but the way I see the problem is I take the example of this pen. I hope you can see the pen on my... So this pen on my finger is unstable. Why is it falling? Why is it crashing? Two instabilities. One, of course, is the fact that maybe I am, moving my finger, I'm trembling, I have some kind of Parkinson's disease. I have not, of course. But it could be a whim of hair, push something, some proximate cause. This is what you're commenting on your TV plateau all the time, right? Oh, the chairman of the Federal Reserve said this and that. Trump opened his door and then issued a statement, etc. So these are the proximate cause that are not actually telling the whole story. The fundamental story is the fundamental cause, which combines the proximate cause. The fundamental cause is the maturation towards an instability through this positive feedback procyclical phenomena. And so to be short, to answer your question, what should we look at and what are the causes? You should look at the large mechanism, the important mechanism that give rise to positive feedback that leads to this maturation towards instability. And when the system becomes fragile, it becomes more susceptible, almost anything can tip off the pen and make the system collapse. So this is, by the way, why pundits and commentators have such a hard time to understand why crises and crashes happen, because their nose is on the windscreen. They are just focusing on the last statement of this and that person, the last geopolitical development, while they should look together with the underlying illness. Or it's like when you take a person, why do you fall ill? You have the proximate cause because you got a cold, because you had you were subjected to some microbes, something like this. A more fundamental cause is your immune system has weakened over the years. Your age, for example, or you have been, being exposed to a lot of stress and so on, bad food, bad way of life, and so on. So everything is evolving through this combination of endogenous maturation, the deep causes that go up and down the financial market, and these proximate causes that are hitting the system continuously as little exogenous stressors.
Professor, thank you so much. To be honest, I probably understood 15% of that. I'll blame my evolutionary inheritance of not being a smart ape at this point, but thank you so much for helping enlighten us on the topic there. More to come, certainly, in this. Didier, Sornette there, Chair, Professor at the Southern University of Science and Technology. Oh, it's too early for that type of conversation. We're still reeling. Maybe a step or two down in terms of the intelligence scale, but not in terms of the significance of this. And that's not, of course, to pour cold water on the interview that we did with the Lenovo CFO, Winston Cheng. Their latest results, the outlook for AI, and the strategy ahead. Plenty more ahead. This is the China Show.
All right, Lenovo says surging AI demand is pushing prices higher, but CFO Winston Cheng told us the company has enough inventory to keep costs steady through the holiday season. It was a great interview we had earlier, and here is some of it to listen back to.
Yeah, we've actually have a lot of experience navigating through different supply and demand dynamics. Of course, the COVID period being one. And of course, I think also 10 years ago, I think there's also some shocks in the market. I think with respect to this current environment, our revenue gains and our market share gains have been very, very significant part of this, because if you recall, back in June, probably a lot of people were talking about pull-ahead demand from the U.S., especially with respect to the tariffs, and therefore they were seeing a second half probably slow down. Now, we were really questioning whether the market was right and we were the one wrong, but we continue to see order load very strong. And you see that in terms of a September quarter being very, very strong. And we capture a global market share, the highest ever, 25.6%, right? Even higher on the AI PC front, on the 31% share. So on the back of those strong revenue growth, we've been engaging with the suppliers, so continue to buy. And so I think that's been very helpful. We also saw memory prices going up. And so for us, we also been holding longer weeks of inventory in terms of critical components. So I think that's also there to position to fuel our growth going forward as well.
What financial assumptions are you making going into next year? Whether or not you've secured that inventory or you locked in those futures prices on memory chips and that key cost component?
Yeah. I think the market is worried about cost and therefore damage on the margins, right?
Yes.
But I think overall, if you think about the other dynamics, which would be then the supply. So those that have the supply actually then would be able to have a position in the market. And I think we would actually say that potentially there's margin opportunities there as well.
So what does that stockpiling look like, though? You're talking how many more weeks or months are you keeping those inventory levels?
I would say that we're probably over 50% of our usual levels.
Oh.
So I think it's a significant in terms of our weeks of inventory as it relates to critical components.
And what sort of pricing advantage do you expect that to give you then? Like, what price did you lock in at? And what's, again, going back to assumptions, where do you think prices will trend?
Well, the prices are going very, very high, of course. And I think it's been unprecedented in terms of this rate driven by the AI demand. So I think this is probably going to be a longer trend. But I think overall in the next, certainly for the remaining of our fiscal year, which is another 6 months away, plus we've got longer term contracts also in place. So I think from that perspective, we feel quite comfortable. Now, in terms of the pricing dynamics, I think currently we're there to commit based on our scale. We can deliver the best price to the market, right, and also benefit our customers.
It seems very clear from the earnings call and also just your comments now that, correct me if I'm wrong, that of any of your peers, you're probably in the best position to, let's say, manage that upward increase in cost pressures. So the next 6 months, this fiscal year, can I ask a direct question? Are you raising prices or not raising prices on the back of those costs? What's the plan?
For us, we've been looking at potentially, depending on the channel inventory levels and other aspects, we would then adjust accordingly. For the near quarter, in terms of the fourth quarter of the current calendar year, we're probably thinking that it's still very strong in terms of the market growth for us. Relative to the rest of the market. We've been going very strong premium to market. So from that perspective, we can still lend our scale, especially coming to the holiday season. I think we want to make sure that we make sure everybody have a very good holiday season to the products that they can buy.
Time.
So I think we will try to maintain that price.
Understood.
But going into 2026, you are planning price hikes?
I think going on to it, given that overall the prices are going significantly, I think we will have to strike that balance going forward. But I think, again, I mentioned it's between price and availability.
That was the Lenovo CFO talking about this unprecedented AI squeeze when it comes to cost components, of course, and chips, and what that might do. Not so much to them, but maybe some of their cohorts in the industry. They are well positioned based on that stockpiling of inventory. Do catch that interview on TV Go for our Bloomberg clients. Check that out. There's also a story out on the interview itself, also on your terminal. Plenty more ahead. This is Bloomberg.
Welcome back. And some of the corporate stories that we're tracking this morning. Well, China's CITIC Bank has secured government approval to open a financial asset investment company. According to an exchange filing, the new entity will have $1.4 billion in capital. It's going to focus on debt-to-equity swaps and equity investments in strategic emerging industries. Billionaire hedge fund manager Bill Ackman is reportedly getting ready to seek an IPO for Pershing Square next year. The Financial Times says Ackman is speaking with advisors and has informed investors, or some investors, that a listing may come as soon as the first quarter. The Wall Street Journal also reported Ackman may list a new investment fund at the same time in a unique, that would be very unique, double IPO.
Okay, double the fun, hopefully. Before we go, just a look at some stock movers in the region here going into the last hour of the morning session in Hong Kong. Alibaba, of course, 5% now, should be session highs. 10 million downloads in the first week, so investors are getting some numbers to chew on here as it pertains to its AI in a bubble and whether or not it's showing up as far as tangible business performance metrics are concerned. China port stocks are on the up. Some stronger regulation around controlling capacity as it pertains to hog production. We're looking at moves, of course, to the upside of many of the food-related stocks in play and some of the defense stocks in focus coming up on your screens as well. Very shortly, there we go, on the back of this escalation, partial escalation as far as the Japan story is concerned, moving some missile systems into a base nearer Taiwan there. But as you can see, market is reacting across some of these names here as well.
Yeah, and you can see that the Hang Seng is essentially reversing those losses we had into the end of last week. It's 1.5% higher. There's that optimism maybe around sales of H200 into the mainland market that sort of lifted markets broadly, but then also this optimism around the Fed is a cut on the way in December.